Hello, everybody. C. Ray Brower here with Your Perfect Home, and we have John Loan King with us today, and we are going to talk about student loans, and that will be coming up next. And we are back. How's it going, John?
I'm amazing. How are you, C. Ray?
Just another day in real estate paradise. You know how it is.
I do. It is an amazing industry, and we just keep calling it paradise, and someday it'll become that again. I'm just kidding.
It is always paradise.
Abs-
Every once in a while, we just got to turn around and look and remember that it is paradise, because as things are piling up on our shoulders once in a while, it gets a little heavy. I know.
I think the word that I use for that is gratitude. You got to be grateful for what you have, the opportunities that you have. So many people have so many greater challenges than we do, and so being grateful for where we're at and what we have and what opportunities we have ahead of us is what's important.
Yep. Faith and gratitude, the two most important things you can have. Absolutely. Absolutely.
Exactly.
Right
Exactly.
on. Well, we're going to talk about student loan debt today and how it can affect people. So, what's some advice that maybe the one key point that we'll end up covering in a lot of different ways that you could impart as we start this journey towards home ownership with student debt?
The first thing is be proactive. Probably the biggest piece of advice: be proactive in looking at your options. If you don't know, the majority of student loans have been in forbearance or put on pause for about the last 3 years since
Right?
COVID came. And everybody's kind of gotten used to, okay, well, I don't have to make a student loan payment. That doesn't really exist. And now, starting October 1st, payments are off pause. And there's lots of programs, and there's some forgiveness, not forgiveness like elimination, but the president's trying to have options to say, hey, if you're having a hardship because you can't make your payment, then they've got ways that they can not impact your credit score if you don't make a payment, even right in the beginning. But the most concerning thing I have for people is hiding and saying, I don't know what to do, and I don't know how I'm going to afford to make this payment. And so they're reactive. They're waiting and praying and hoping that nobody catches me, and I can get away with continuing to not make my payment. And so when you ask me what's the number one piece of advice, be proactive. Whether you're looking to buy a home or not looking to buy a home, talk to your student lender, your student loan bank, and find out what your options are, because there's lots of options, but you want to be asking about them and informed, and not just letting the bank tell you this is what your plan is going to be.
That is great, great advice. With everything in our life, be proactive and move forward and make sure that you are the one stepping out, not waiting for, oh my God, they got me now.
How
That's
did this
probably
happen, C. Ray?
yeah. I don't understand. I was fine yesterday.
It is crazy how many people I talk to who have, and this is going to come out more negative than I would like, but it's a victim mentality. It is, I was taken advantage of. It's not my fault. I didn't know any better. And I think that there's very few circumstances in life that really is true. And it does happen,
Oh
but
yeah.
I think
Yeah, it
that
can happen. It can. About this much, about this much.
yep,
There are some things that will blindside us because it really truly was a blindside thing. How do you get in a T-bone wreck? That's one of those things. It
that's
could
right.
happen, but you go through 10,000 intersections, 100,000 intersections, and never get T-boned, right?
Well, but let's be thoughtful about this. So I'm teaching my oldest to drive right now, and so we're having this conversation. And I said, look, as you've got to look for the clues around you, because everything that happens on the road is a clue. And you see the guy, you're at a stoplight, and you see the guy next to you didn't go when the light turned green. That's a clue you should not go either. They see something you don't see. And if not, then hey, no big deal. Somebody's going to honk at you and get mad. I'd rather have that than be dead. So look for the clues. And if you're paying attention to the clues, then you're less likely to get blindsided or T-boned. And in things like debt and managing your money, there's clues everywhere. You just have to look for them and take advantage of them instead of closing your eyes and saying, I don't want to have to deal with it.
Yeah, very, very, very true. People that are concerned about getting a home, and probably the first thing that they think about is, or they should think about, is their credit score.
Yes.
How does the student loans affect their credit score, and what can they do to help raise their credit score because of the student loan?
Generally speaking, student loans, unless they are a negative status, like you haven't made a payment, you're in collections, and mind you, nobody's made a payment for 3 years. So that's not what I'm referring to. I'm saying you're supposed to make a payment and you're not. That will harm your credit. Other than that, and I'll give my disclaimer. Nobody knows exactly what the credit companies look for when they come up with the formulas. They don't tell us, because otherwise we would manipulate our lives to match what they're looking for. But I pull 50, 60 credit reports a month. I see a lot of debt. I see a lot of credit scores. Having a student loan in and of itself does not appear to me to be a negative influence on your credit score.
Okay.
The biggest issue, because there's 3 things that banks look at. They look at your assets. How much money do you have for down payment and closing costs? They look at your credit, how well you've paid your bills in the past. And they look at your income compared to your outgo, your debt to income ratio. That's the piece that student loans are going to make a big impact to. And it's really going to mean a couple of things. The first thing is, over the last 3 years, the banks have had to count a payment against you anyway. Even if you weren't making a payment, we would have to count the payment against you. So lots of people are worried right now. And I'm referring to economists and talking heads on TV, and they're saying, oh my gosh, student loan payments are coming back. It's going to cause a wave of foreclosures on homes because people can't afford to pay for their house payment and their student loan. Well, for the last 3 years, we've had to qualify you assuming you were making a payment on the student loan. So that's not likely to be the case. Now, it could be that you snuck by barely having enough income to qualify, and you spend a lot of money on things that aren't important. And now you need to figure out, hey, do I stop spending money on those important things because I have a student loan payment? Or do I keep doing that and hope I can make my payment? Or do I just ignore my student loan payment? So the thing that is going to impact you is what type of payment plan you get onto with your lender. Now, there's multiple programs, and the federal government's actually trying to introduce even better. We can argue. Let's argue, C-Ray, on whether this is better or not. Okay.
We are talking about the government.
I'm from the government, and I'm here to help.
Exactly.
So there's a term called an income-based repayment plan. IBR, sometimes the acronym is IDR, but basically it's a payment plan that's been around for a long time that essentially says, well, if you only make X amount of dollars, you certainly can't afford to pay for this high monthly payment on student loans. So there's some circumstances where they say you have 0 payment required. I have a client who got a degree that exceeded what his employment opportunities were. Let's call it that. Okay. He has $300,000 of student loan debt. And for the longest time, he was making about $28 an hour. Okay. And
Wow.
his required monthly payment was $25 a month. That's it.
On a
Because that's
$300,000 loan.
on a $300,000 loan. Now,
Wow.
with
Can you
those
set my
loans,
house up with that, John?
let's rewind back to 2005. I certainly can. It's called a pickle payment loan. Here's the deal, see, Ray. The what we're describing right now is the one of the types of loans that crashed the housing market 20
Right.
years ago. Okay, people got mortgages and said, "Oh, you can't afford that. Great, we'll just charge you a payment that's less than the interest you actually owe, but you can afford that number, and don't worry, everything's going to be fine in the future."
You're going to sell the house for so much money. You'll never
Don't
make that
worry
payment.
about it.
Don't worry. Don't worry. I'm from the government. I'm here to help.
That's right. That's right. Okay. So now what is being introduced, and I'm not going to be political here. I'll leave that to you, see, right? What is being introduced is an enhanced version of the income-based repayment plan that uses more conservative calculations. Maybe I should say more aggressive calculations. What it basically says is income-based repayment plans look at how much does it cost for you to live, and they protect that amount of your income. And it says, hey, based on your family size, based on where you live, based on all these factors, you need this much money to live. I can't touch any of that. So I can only consider what you earn above that number. The federal government wants to, and is in the works of increasing the amount of money that they set aside for you to live off of. Therefore, for everyone, that calculation means there's less income for them to use to make your repayment calculation. Therefore, your new payment is going to be lower under this proposed program. And honestly, I've read enough about it that it might actually be in place. I haven't studied it completely. I understand the basics of how it works, but I don't want to say for sure it's a done deal. But I feel like it is. Like based on some of the things I've read, I think it's actually in place, which is going to help because it's going to help you have a lower monthly payment. And some of the articles I read allude to the fact that, hey, the president couldn't accomplish his goal of eliminating the debt. So he's doing everything he can to decrease what you actually have to pay towards your debt. My concern long term, and this doesn't have to do with mortgages and probably a tangent we don't need to go down, but then when does it ever get paid off? Like, what's the end game of this? And I don't know. I don't have a good answer. I think I'll give you my opinion of what caused this issue, which is money for student loans became fast and easy to get. And colleges said, man, if they're willing to loan the students the money, then I'm willing to charge more for tuition. And tuition got out of control because there was, it's, again, I'm gonna step on in a minefield here as I go through some of these analogies, but I think we can draw some good parallels. It's no different than some of the health insurance issues and the cost of prescription drugs. And, you know, who really is the checks and balances here? Because the consumer, they aren't paying the real cost of the prescription drug. And so, you know, there is a disconnect. And there was a disconnect in the higher education system that led to where we're at. Is that the fault of the person that owes $300,000 that makes $28 an hour? I don't know. I'm not going to say it isn't, but I'm not going to say it fully is, because that was a system that they were born into, per se, that the timing of when they went to college, that's just how the system worked, right?
Yeah, the system was working the way it was working, and they were allowed to take out that money, as you said, $300,000. I think your words were that he didn't have the earning potential to pay back.
His degree was greater than what his income opportunity was.
Right, there you go. And unfortunately, that mentality of being able to get that money, and get my education because I like school, because I like college, because I'm there and doing what I need to do to be able to maintain in school. I mean, we won't even go into what his actual GPA was. um, he goes by maybe, I don't know, it doesn't matter. But when you've got $300,000 worth of loans that you're making $25 a month payment on, your thing was, I don't know when it'll ever get paid off. I think it gets forgiven at death, doesn't it?
I would imagine so.
Yeah.
And so I want to circle this back around to actionable steps. You okay if we do that? Okay.
Yes.
So the most important thing is don't fear buying a home when you have student loan debt, but recognize that each type of loan has a different methodology. And I'll give you some specifics for you and for your listeners.
Yes.
People talk about this term conventional loans. Like, I'm getting a conventional loan. There is no company or entity named conventional. Doesn't exist. Okay. It's a label that is used to describe loans that are backed by two entities, Fannie Mae and Freddie Mac. Now, I like to say Fannie Mae and Freddie Mac are like the Coke and Pepsi of the mortgage world. So, see, Ray, I don't know if you're a soda drinker, but everybody's got to be on one side or the other. So, are you a Coke or a Pepsi guy?
Yeah. What's that?
Are you a Coke or a Pepsi guy?
I'm a Pepsi guy.
Got it. So you go to a restaurant and they only have Coke. You're going to drink it because it's close enough. It's not my preference. It's kind of the same thing. But if you have a choice, I choose Pepsi. I'm going to buy Pepsi. I'm going to choose Pepsi if I have the choice. But it's kind of the same thing, and I'll drink Coke if I have to. Okay.
Yep.
So Fannie Mae and Freddie Mac are basically the same thing. The rates are the same. The rules are basically the same with a few minor differences. Student loans are one of those few minor differences that make a major difference for someone who has student loan debt. So if you are doing a loan with Fannie Mae, now you talk to your lender. Most lenders can do both. Very few lenders only do one or the other. Okay. So most time lender can do both. And if you're doing, your lender would use Fannie Mae if you are in a payment plan and your payment is less than 0.5% of your balance. Because Fannie Mae says, as long as you're in a payment plan, we can count the payment plan. So I was able to use the $25 a month that my client was paying. I could use that on Fannie Mae because Fannie Mae doesn't, says, hey, yeah, that's a payment plan. So we can use that monthly payment. You with me?
Yep.
Versus Freddie Mac and FHA, they say, no. We need to count the actual payment that will pay off the loan. It's called fully amortized. The payment that will actually pay off the loan, or 0.5% of the balance every month. So in this case, 0.5% of $300,000 is $1,500. And that means that's $1,475 more than what he's really spending. And when he's only making $28 an hour, he can't afford to budget or allocate in his income $1,475 of extra expenses.
Right.
So if you have a payment plan and you actually have the option of this new income-based repayment plan that calculates the number even lower, that's great, provided you're qualified for a Fannie Mae conventional loan. But if you're doing an FHA loan or a Freddie Mac loan, we have to count 0.5% of your balance. Now, in a lot of cases, that isn't a big deal. I have a client, he's a pharmacist, and I pre-approved him yesterday. And as we're talking, he said, John, what you're telling me is I need to go with Fannie Mae. And I said, no, I don't know enough to give you that advice. And within the next 15 minutes, I knew enough. And I said, honestly, it doesn't matter because you make a very good income and you're not trying to buy a really expensive house. So I would let you spend this much per month and you're only trying to spend this much. So there's room for us to allocate that high payment to you. So I don't want anybody taking what I'm saying as, okay, then I have to go this direction. The problem with, any advice that you get online, and see, Ray, you do a lot of podcasts like this. I do a lot myself. I like it when people watch my stuff, as I'm sure you do too. But I implore people, do not take anybody's advice online, including my own, because your individual circumstances matter. It's like taking a prescription drug because, well, you saw online that prescription drug saved somebody's life. I'm not sure that's a good idea. But
doesn't even have to be prescription drugs. My uncle was big on health additives and supplements and stuff, and he actually ended up in the hospital because he overdosed on over-the-counter herbal medicines that were supposed to make him better, but he took so many and so much, it actually put him in the hospital. So, yeah. Online advice is that you have to make sure that you have all the facts for your circumstance and your body size, your weight, your income, all that. It all is a factor, and people really need to pay attention to that for sure.
That's correct. And the key is just make sure you're asking the right questions. But most importantly, I go back to what I said at the beginning of this when you asked me about the best advice I've got. As somebody that owes money in student loans, whether you're buying a home or not, get on the phone with open the letters, read what they're sending you right now. Make sure you understand it. And if you don't understand it, call them. Because just like people who are dealing with trouble making their mortgage payment, the worst thing you can do is hide and hope it gets better. You haven't made a payment on your student loan in 3 years. The truth is it impacted you anyway when you were buying a house, so it really isn't that much of a change. The change is now you're responsible to make a payment. And the government is saying you can miss your payment. This is one of the other things they're adding. And again, I'm not quoting this as being in place, but I'm pretty sure it is. And they basically have said, hey, we're going to give you a ramp up period. I think it's about 6 months worth of ramp up period, that if you're unable to make the payment that's due on October 1st or November 1st or December 1st, they're not going to impact your credit score with it. So you might read that and say, great, then I'm not worried about making the payment. But when that ramp up period's over, now it's going to impact your credit score because you forgot that, oh, that's right, that wasn't a permanent ramp up period. And that's my fear for people is they just don't read the stuff that comes in the mail. They don't pay enough attention and they end up being caught with being surprised that they were taken advantage of.
Yeah, that is the problem with not paying attention and asking all the questions. You have to ask all the questions so you fully understand everything. You know me, I'm a big question guy, and I definitely, if I don't understand something, I'm going to ask enough questions until I do, because that's the only way that you can protect yourself from being blindsided by something that was actually there to begin with, right?
Yep, I completely agree. So hopefully this has helped people have some questions to ask, as you're talking to your lender on the student loan side, as you're talking with your mortgage lender, just understand the good news is we figured out how to calculate student loan payments and meaning the rules from a lending perspective. There was an era about 7 or 8 years ago that the rules were changing 3 or 4 times a year. And it was impossible to keep up because I'd pre-approve you. And then 3 months later, you'd come back and want an updated letter. And I say, you no longer qualify because now we're going to charge you 2% of your balance of your student loan as a monthly payment. And then we realized we went too far and we go the other direction. So the nice thing is, as an industry, we've settled in and pretty made some consistency behind the rules. But every type of loan has a different set of rules. So make sure you're asking the right questions and ask, hey, if my student loans are impacting me, what if I went on an income-based repayment plan? Or what if I got off of my income-based repayment plan? What if I improved my credit so I could change to a different type of financing? Ask all of those questions because it is critical, because the rules are applied differently depending upon the type of loan that you're doing.
There you go. There you go. Question, question, question until you got the answers you need. I love it, John.
Right.
Thank you so much. I really appreciate you coming on. You always have such great stuff to help people understand. And like you said, it is help you understand today. It isn't the gospel. It is a roadmap to help you get to your time of home ownership or whatever it is you're looking to achieve in your life. Anybody has any questions about loans and anything, John, a Loan King. His information has been scrolling down below. And of course, everybody go out and be the sunshine in somebody's rainy day. And never forget C-Ray to find your perfect home. We'll see you all again next time. Thank you so much.